guys, Ron from Rohde Law, and we're headed to a second industrial outdoor storage acquisition. It's in DFW, and it's a really exciting opportunity for industrial outdoor storage. So watch this video if you're interested in direct investment in industrial. Ron from Rohde Law, and if you follow this channel, you know that we recently, a year ago, we purchased an industrial outdoor facility. It's about 4 acres in Plano, and it's really part of a existing trend. I believe that industrial outdoor storage, has a lot of legs. There's a lot of opportunity if you assemble a portfolio of strong assets to bundle those up and sell to the larger institutional or private equity buyers. So that's what we're doing, and that's part of an investment, personal investment thesis of mine. So we're driving now to our second location that we've closed on. It's in Haltom City, Texas, which is in Tarrant County. It's very close to the airport. This particular location, why we love it, it's inside the loop. It's inside 820, which is kind of the a city boundary line. So it's really got that infill location. There's tons of proximity to great warehouse and distribution, but that relates back to its primary use, truck parking. So semi-truck parking, trailers, that's its primary current use. There is an existing vacant building that's 6,000 square feet. So that's going to talk about later is kind of our plans for the property. But let's talk more about this location. We like the proximity. It's close to the growing population, over 2 million people in Fort Worth, Texas. Haltom City is kind of it's its own city, suburb, directly adjacent. It serves a lot of those residents. So potential tenants for us are serving all types of residents in this area. And so it's not just limited to a kind of niche or a specific subset of use. So that's the location. How did we find this property? We tried talking to brokers. I think it's very tough because at this price point, right, we're in that kind of 3 to 6 million range. There's not a lot of commission for the amount of work that has to go into finding these types of properties. So we ended up creating a list of every single asset in DFW that was attractive to us. And then we selectively reached out to all of the owners. So we're doing flyers, we're doing cold calls, we're doing emails. There's just a lot of information directed at these sellers who are not listing their properties. So that's how we found this, is off market with a targeted call with a price to this seller. So we were able to get under contract at 2.4 million. And really our plans for the property now are twofold. One is to raise the existing rents on the existing truck tenants, as well as conducting some improvements. So we have plans to put in a security gate. This is a 24-hour fenced facility. We're gonna smooth out some potholes, fill in that gravel, and really improve some of the drainage and runoff. We also are gonna add some security lighting as well as video cameras. So between those upgrades and really making this a solid gravel facility, secure, then we feel comfortable in raising the rents to market, which is around $150 per 75-foot space. We also have some 40-foot spaces, and we'll also start advertising a daily rate. So hopefully, this property right now is at 100% occupancy, but hopefully by raising the rates, we can clear out a little bit of space so that we can advertise for daily. In addition to that, we plan on doing a full marketing blitz, right? The good thing about industrial outdoor storage or truck parking in general is a very fractured market. The players in this space tend to be logistics companies, other truck drivers that happen to buy a lot, maybe at a good time, but they just rent it out to their friends. They're not really, I would say, looking to maximize their yield on their property. They want low headache. They don't want to mess with, credit cards or invoicing. They just want easy, no complaints. It's a little bit different than what we do because with our prior facility, we really learned that people value convenience. They want online statements. They want credit card, ACH, debit, all of that stuff as an option. And so we give them an online portal to pay. They can see exactly numbered reserved spaces. We have contracts for the drivers now. And there's really value, right? And it's very self-selective because I think that for us to position this property with better improvements as well as raising the price, if a tenant doesn't want that, that's not a tenant that we want. And what I mean by that is We want the people who are trying to grow a business. We want people that want to invest in their equipment because there is security. And because there's security, they're able to reinvest into their company. So it's really a fulfilling cycle, but I think that it shows, what we can do with this. And there's a lot of potential, right? We're talking about a 50% increase in rents just from completing those types of improvements. So we'll walk through the property a little bit. I'm going to show you around the site some of the existing problems, some of the good things. Let's talk about financing. At a certain level, real estate finance is an incredibly important part of the deal for underwriting. There's a saying, and I quote it a lot, is that good debt can't save a bad deal, but bad debt absolutely can kill a good deal. And this one is no different, right? So with all of the economic uncertainty, inflation, rate increases, there is a strong case to be a little bit more conservative. And we've done that on this particular deal. So we're only coming in with 60% LTV. And that's contrasted to maybe an aggressive 80% or 70%. So 60 is definitely on the lower side, and it really represents a lower monthly payment, a higher equity amount, so that we can weather any type of recession. Back when we went under contract for this and when we were underwriting it, we were in a period of uncertainty. We really didn't have an idea of what the supply chain disruption, housing prices, all of this stuff, what that would do. And so we made the decision earlier to go for a 5-year fixed term, but 60% LTV. That low LTV, really is going to put us in a better position. Sure, our return is a little bit lower. Our cash on cash numbers are a little bit lower, but that trade-off is worth it for the peace of mind and the certainty that we are going to be able to cover debt service. And that's really important, I think, when you talk about risk and how to analyze it in uncertain times, rising interest rate times. So we did that with fixed rate. For better, for worse, we're locked at 5.4%. I would have preferred to lock a little bit earlier, but our underwriting wasn't able to be completed early enough. And again, it would have saved maybe half a point, something like that, 50 basis points. Maybe less than that, I would say 25 or maybe 12 and a half. So anyway, financing is really important. Working with an easy lender, because on these types of value add properties, it's not as straightforward how the revenue is accounted for, right? Our leasing was not very well documented, and so it required working with a lender that was a little bit easier to work with to convey the numbers based on rent rolls and collections versus having a single tenant with an existing lease. You can shop that around and probably get the lowest rate you want. But that's the trade-off that we've learned kind of doing deals and understanding what are your strengths as a borrower and what do you need from a lender. And a lot of times it's not just rate, it's not just the lowest price possible. You're not going to get approved at some other banks that have very strict underwriting. And I want to say we don't have strict underwriting, but it's different. They're looking for different things. So this debt is full recourse, right? We're using kind of a bank lender here. It's a very small loan balance, so it is full personal recourse from myself and a partner. That's kind of what we're offering as the GP or the sponsor, somebody who found this deal, is we're putting our full personal guarantee behind it. What are the tenants? Who are the tenants? What I like about this property is that it's a mix of smaller individual or onesie twosies, we call them. These are truck operators that maybe only have 1 or 2 trucks, one or two drivers, versus larger tenants that maybe are responsible for 10, 15, 20 spaces. And there is a good balance between single users who are companies, right, responsible for, I'll call it 10 to 12% of monthly revenue. There's a handful of those. There's probably 4 or 5 companies that lease more than 10 spaces. But then the rest of them are smaller operators. And so you get this blend of easy to replace tenants if they leave, but also you can focus on your core relationships with, call it, those 5 tenants that represent 50% of your revenue. Again, 50% is kind of that break even, covers your debt service, covers your property taxes. We have all gross leases on here. But that is really kind of a magic number. And if you establish good relationships with those people first as your priority, then you can work on raising the rents on your smaller operators who just, I would say they come and go, but they're more fluid in terms of their commitments to the space. What type of lease terms do we have? So for this truck parking, it is almost always going to be gross leases. And that's very similar for other parking locations, which is the tenant pays one flat rate every month and they get all amenities included in that. So there's a lease agreement where it lays out the obligations and the duties of the landlord to provide X, and in exchange the tenant is responsible for paying just a flat monthly rate, and that encompasses everything. So we have to take into account property taxes, insurance costs, utilities, any property management. That all has to be reflected in that one gross lease price. What we will do is that all of these prior tenants, they didn't even have written leases. So they were on a month-to-month, I would say an oral or a handshake agreement. They have communicated the terms in paper, but I wouldn't call it quite an official written lease. So what we'll do when we bring them up to speed is we will put them onto formal leases that are still month to month, right? We still want the flexibility, and it's only if a tenant requests a longer term, we may look into allowing them to sign a longer lease, but it's to their benefit just as much as ours. So we're going to bring them up to speed. We just have DocuSign. We are able to get emails and start communicating. Everybody can just do e-sign. It's very easy, but it does lay out the rules and the terms of the lease obligations, as well as identifying the trucks. So this is a tip for truck parking. Identifying exactly what vehicle your tenants are parking is a big part of making sure that you're capturing all of the efficiency. And what I mean by that is a lot of people, once they have a few spaces, they will get greedy and they'll bring in trucks just for a temporary basis. They'll park one or two trucks in front of their other trucks. And maybe this is in an access way, maybe this is in a roadway, but they don't care, right? They say it's temporary. They're just going to park something there for a few days, and then it turns into a few weeks. And pretty soon they've been parking this truck for months at the inconvenience of other tenants who have to drive around this stationary truck. And again, maybe it's a small surface truck, maybe it's like a tow truck, pickup truck even, but it's small, but it inconveniences the other tenants, and it's something that you haven't accounted for in terms of how you underwrite the property. And so it's really critical that we have lease agreements where we identify the trucks, either a number printed on the outside or a license plate or some type of identification of the trucks that are parking, to ensure that if you do a site audit, and again, you need to put boots on the ground and put eyes on the site, there are no trucks parking on your site that do not have a written lease agreement. That's critical. I'll say it again. There are no parked vehicles or storage on site that you don't have a written lease agreement for. So that's how we handle identifying the tenants. All right, we're on site now, and today is a Sunday, but as you can see, this is very full. This definitely needs some improvement to the site layout, so we're able to fit more trucks in. All right, so let's look at the structure here. You can see this was actually an old truck terminal, and so they've got all these dock high doors, although now it's not really suitable because the ground has come up and it's not full dock high. I don't know if you can see that height, but it's not full height anymore. And so if we were interested in trying to reconvert this back to an operating truck terminal, we'd have to dig out the ground. So we'd have to dig out the gravel here, put in concrete and have it a slope. All right, guys, well, that wraps up this industrial outdoor storage video. I hope that we've gone through some very specific details about how we got this property, why we chose this property, how we financed the property, and what our plans are to add value, raise the rents, and then exit for hopefully a good payday. Just to recap everything that we've gone through: why industrial outdoor storage? Why did we pick this asset class? Site selection, how to choose a market, how did we find this property? Brokers are one resource, but they're not the only way. What are our plans for improving the property? How are we going to add value and raise the rents? fractured market. That's always a key way to develop a niche. Financing, underwriting. We used a model from adventuresincre.com. It's a great website. Check it out. They have free models for you to download. Financing, underwriting. Real estate finance is critical to understanding how do you create your cap stack and how do you finance the acquisition. Loan details. Also very important, low leverage as a hedge going into some uncertainty with a recession. Who are the tenants, right? You really need to understand their business so that you can make improvements and spend money that actually helps them in their business and generates more value for you because they'll pay more rent. Very critical when you're entering a new industry and something you don't really understand. Lease terms, again, triple net versus gross leases, understand the value under each one. Finally, what opportunities exist. There's opportunities everywhere. I think the key is really to go and figure out what your unique value proposition is. You can't be like everybody else bidding on the exact same properties. You're never going to win. So find a niche that you can be the best, you can excel, and that's it. Smash that like button, drop a comment if you guys found this video helpful, and subscribe for more industrial real estate content.